my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A significant move lower yesterday. A gapping lower, bearish opening, long black Mariposa. Market opened below the January 2021 high at 69.10 and the medium moving average currently at 69.16, punching down through the March 2020 high at 68.71.5 as well as the May low at 67.99. Prices slowed after breaching the May low, but I still once again suspect that we do not have any significant support below until the rising long moving average, currently 66.35. Let's once more take a step back. I mentioned last week how the indecision seen 2 weeks ago that on a daily basis eventually led to a fourth countering move after the market bounced off the January high at 69.10 seemed to have slowly finalized. I was not comfortable to say it had ceased. After all, just look at last Friday's action, but the market was heading the way of the weekly key reversal down made 2 weeks ago. This move lower yesterday is all part of this. I suppose all this can be ultimately traced back to the failure on the 16th of June to break the projected 50% Fibonacci line overhead at 72.15. Personally, as I said last week, I have concern about this market, and all yesterday did was verify it. So far today, a higher open and an attempt to move up towards the May 2020 high at 68.71.5. But it has fallen half-heartedly, and prices are back now to a little bit over yesterday's close and looking like an indecisive spinning top right now. German DAX futures. A third bearish black crow yesterday. This time it was a bearish long black Mariposa. A more than suitable follow-on lower after the earlier bearish black Mariposa coming as it did after 2 sessions made consecutive, if opposing, indecisive spinning tops that actually whacked into the overhead resistance of the all-time high made in June at 15.806 and ended up getting nowhere. This is all, as I said last week, deeply disturbing. The market dropped down below the short medium moving average, currently at 15.515, down all the way to breach and close below the medium moving average, currently at 15.233. Now, unlike London, further below we still have the May and April lows at 14.806 and 14.833 respectively, as well as the old September to November reverse head and shoulders neckline, currently at 14.648. Below that, well, that would be the rising long moving average, currently at 14.299. Personally, I'm not that confident in the neckline. Like I said yesterday and last week, it's all getting a bit precious now, especially after May's monthly key reversal up has seemingly been neutralized. So far today, a higher open and a move up through the medium moving average, but only to the lesser Fibonacci level at 15.289 before coming all the way back down towards yesterday's close, today's open, and looking like an indecisive, well, maybe a doji cross or spinning top now. Hardly surprising, I suppose, after yesterday's big move. US E-mini S&P futures. A third bearish black crow yesterday. This time it was also a bearish opening long black Mariposa. Let's take again a small step backwards on this to get a better picture of what is happening. So, 3 weeks ago we had a break upwards out of the not that distinct rising wedge pattern formed over mid-May to late June. Target on the top side, that is target X, is in the 44.12 area. We've come close to reaching up towards that number, but 4 days ago we had an outside day, the lesser cousin that is of the key reversal, and it looks like we're with issues trying to bunch up through the 43.85 area. This left a big question mark on whether the market can make it up there at all. Last Friday it moved from being a small question mark to a medium-sized one, with the nearby support of the 50% projected Fibonacci level at 43.83 was no longer there, but the upper trend line currently of 42.94, the rising wedge pattern, well, that's still held. Yeah, this did look like we might have a possible false break higher. Yes, there was a second consecutive close below the 50% projected Fibonacci level, but more importantly, the market punched down through the upper trend line of the rising wedge pattern, the short medium moving average, currently 42.51, and a significant May high at 42.38. The price is finished up closing on the short medium moving average. Whilst this is a big move lower, it is not as bad as some of the other stock index futures. Here we still have as support medium moving average, currently at 41.56, plus a 100% projected Fibonacci level at 42.02 and two 50% projected Fibonacci levels at 41.81 and 40.82. Though with the move back into the rising wedge pattern again, I will most likely retire target X, at least for now. So far today, a slightly higher open and a small attempt upwards towards the upper trend line of the rising wedge pattern, but it seems half-hearted. I suppose it's hardly surprising after yesterday's action. French CAC 40 futures. An important gapping lower third bearish black crow yesterday. Almost, but not quite, bearish opening black Mariposa. Since mid-June, this market has taken a course of 2 steps down, followed by 1 step up, and then again 2 steps down, etc. Yesterday was the most recent episode of this dance. Prices not only gapped lower, but punched down through the 50% projected Fibonacci level at 63.48, the medium moving average currently 6300, the lower trend line currently 62.69 of the recent descending expanding wedge pattern, and also the important April high at 62.80. We ended the day closing just under the rising medium moving average. Now, whilst we did see prices penetrate and breach the lower trend line of the descending expanding wedge pattern, we did not close below it, and I am not fully comfortable yet to start labeling targets. However, I can give an idea of the size of any possible moves below or above. A move low would be about 135 points under the confirmed breach of the lower trend line. A move higher would be at least, well, let's say about 350 points over the confirmed breach of the upper downtrend line. I'll leave it at that for the moment. So far today, a higher open and a reactionary move back up over the 50% projected Fibonacci line at 63.48, but then the market has pulled back down to this level. Well, for now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.